The housing market is red hot as low supply and strong demand have made buying super competitive this year, and sellers pickier than ever. That's giving all cash buyers a leg up, and Diana Olick has more for us on that story. Diana?
Yeah, Kelly, we have some exclusive numbers from Realtor.com and Redfin that give great insight into the market right now. All cash sales now make up about 36% of sales, and that's up very slightly overall from last year, but there has been a much bigger shift by location and price point. All cash sales are way up in the Northeast and West, but steady elsewhere. Now, looking locally, the highest share of all cash sales are in Nassau County, New York. That's just outside of the city on Long Island. Nearly half of all sales there, all cash. Then the next 6 top markets, all in Florida. Atlanta and Tucson also saw a lot of cash buyers. Now, on the flip side, a very low share of cash right here in Washington, D.C., in Denver, San Diego, and Oakland, California. By price point, all cash sales jumped 6 percentage points at the lowest price tier and 3 at the next rung up. The middle price tiers, though, they stayed about the same and actually dropped in the $750,000 to $1 million range. Then at the very top of the market, another jump in cash in the million-plus range. Investors have always favored cash, but are doing so even more this year. They're usually on the low end of the market. That high-end buyer using all cash, that may be more about competition for those big homes with all the outdoor work and school from home spaces. And, of course, the jump in the equities market. Kelly?
Yeah, I mean, I can maybe see how Wall Street with the big annual bonuses or Silicon Valley with maybe some of these new IPOs, how those could be cash buyers on the high end. But I'm curious how this is impacting the overall market. Does it trickle down in a helpful or a harmful way to kind of everybody else, the middle or the lower end on the price range?
Well, it certainly makes it very competitive on the low end. And look, first-time home buyers are already up against investors who love to live on the low end of the market, so it makes it tougher for them to get in. We are, however, seeing some buyers, borrowing money from family and friends, closing the deal, and then taking out a mortgage afterward. But it's just so surprising, given how low mortgage rates are right now, that we're still seeing such a high share of cash deals.
That's something to ponder. Raising all that cash from family and friends and then turning around to repay it. It's like a syndicate.
Shepard Smith here. Thanks for watching CNBC on YouTube.